Thank you. Good morning, everyone. Hope everyone and their families are all safe and healthy. Thank you for joining us today at the SHARE conference. I'm delighted to have with me today the senior management team of Delta Apparel, Bob Humphreys, Chairman and CEO, and Simone Walsh, CFO. It's very timely that we're speaking today with Bob and Simone, given the fact that they just issued a release of a new on-demand long-term relationship with Fanatics, which is very exciting. For those of you who don't know, Delta Apparel is a vertically integrated international apparel company that designs, manufactures, sources, and markets a diverse portfolio of core activewear and lifestyle apparel products. I wanted to set the stage with all of you in order to go through a little bit about what Delta Apparel does and their different buckets. It couldn't be more timely given today's announcements. Bob, why don't I turn it over to you? Thank you.
Thanks, Dana. Good morning, everyone. I think just for a good brief overview of Delta Apparel, it's important to understand that we're a vertically integrated manufacturing platform. So we make about 94% of the products we sell in manufacturing facilities in the U.S., Honduras, Mexico, and El Salvador. We have 5 distinct go-to-market strategies. Our basic activewear business, where we sell blank t-shirts to the next value-adding partner in that chain. We also have global brands that we support off of that same platform, where we'll make product, embellish product, and have it retail ready for the largest global activewear brands in the country. We have a retail direct strategy as well. We are a large screen printer and a large embellisher of t-shirts, and so over the last number of years, major retailers saw our supply platform and our participation with other channels that ultimately got to them and started coming directly to us, particularly if they have a license for a particular IP that they want to have in their store. So that's been a growing channel of distribution for us. We have our DTG2Go business, which is our digital print business in 8 locations across the U.S. 4 of those locations have our newest Polaris equipment that we co-developed. And as Dana just mentioned, we just announced a major long-term supply agreement with Fanatics to do their make-on-demand product through our channel of manufacturing and distribution. They're currently in 3 of those 4 locations, and we'll soon turn on the 4th location to support the Fanatics business. And then our 5th go-to-market channel is our Salt Life business, which is our lifestyle brand that we started nurturing about 12 years ago. It's continued to grow through a lot of channels of distribution. Today, we enjoy a strong wholesale business with traditional retailers and boutiques near the coast. We also have an e-commerce business and a growing retail business. I believe we're up to about 15 Salt Life retail doors, which has been a fast channel of growth for us over the last 18 months, and have about 4 additional doors that will open between now and our September fiscal year end.
Great. So, Bob, tell us a little about, when you bucket the groups, Delta Group, where's the growth coming out of Delta Group? I've always thought of it as 2 buckets, DTG2Go and Delta Activewear. What should we be looking for going forward there?
Yeah, so if you look at our basic activewear business, so setting aside those last 2 channels that I spoke to, it's stronger than it's ever been. The demand for our supply chain, our manufacturing, our technology that monitors orders and has them prepared for retail ready selling is very strong. Our unit growth in that business this year is up in the high single digits, and then we have inflationary growth over that as well. It's the most profitable that it's ever been in our history, and we continue to look to debottleneck our manufacturing. We have new equipment being installed as we speak. We have other projects being analyzed as we speak to continue to grow that platform as our customers and end retailers and end consumers are looking for product made in this hemisphere that's closer to market, ready for current consumer taste and have transparency on where raw materials are coming from, labor standards, and what have you. So we see that as a changing tide, actually, from the last maybe couple of decades, where our customers and end customers are really looking strongly for more product made in this hemisphere. So we'll continue to expand our capacity to support that.
Got it. And then when you think about on the capacity, and I think you've had Hot Topic as a customer, now Fanatics, how much can you support, and how do you see the margin potential of that business?
Yeah. So that's in our DTG to go business. And, I'm an optimist on that. So when we started 14 or 15 years ago, I thought, well, every t-shirt that's printed could ultimately be printed digitally. We're a long, long ways from that. And quite frankly, the early growth was slower than I was expecting it would be, but it continues to march forward with acceptance and then with better technology to do that. So we see that continuing right now. It's growing in the mid-teens from a unit growth standpoint. And we certainly expect that to continue. And, right now, quite frankly, are managing that growth really for, onboarding the long-term partners that we see as the next chapter in how digital will go. It started with e-retailers early on. It was a great business and still is. And that's what allowed us to invest in the technology and keep it growing. But now we're having the next tier of retailers and IP owners that want to sell product off of that platform. So I think we're in a new chapter that's just beginning, and growth will continue to accelerate.
Got it. When you think of growth, Salt Life, the other part of the business, has growth ahead also. What distribution opportunities do you foresee there? What do you see on DTC and wholesale order trends?
Yeah, so I think the thing that's really interesting on Salt Life, if you look at their social media engagement, it way outweighs the current revenue of the brand. So it just gives us confidence that the consumer loves Salt Life. They love thinking about living the Salt Life, and they're looking for more and more product. And as we've given that to them over the last years, they have bought more product really in all three channels of distribution. So the thing that I think surprised us the most post-pandemic was the growth in our traditional wholesale business. We thought we would lose smaller retailers to bankruptcy. That larger retailers obviously have had some struggles, but people have come back very strongly in the wholesale channel on the Salt Life business. So that's been the surprise. And as we've tried to build more direct to consumer, actually our wholesale business has grown to the point that we're not really meeting our goals of more direct to consumer purchasing, even though it's growing well too. So we've been capacity constrained on our e-retail business there. And so that's been rather flat for the last couple of quarters as our production's been sucked up to go to other places. But we've made some structural changes to support that in ensuing years, and expect our own website sales to start accelerating again as well.
And Simone and Bob, anything else you want to tell about the business of Delta Apparel before we move on to our macro perspectives?
Sure. I think that I can make some comments about, I think that we've been very fortunate coming into trading through COVID to be here right now with a vertically integrated supply chain platform that is continuing to attract our customers to us. We are all dealing with supply chain challenges, and I'm sure we'll get to that shortly. But I think that at the moment, our core activewear business has never been stronger. And you can see then the growth in both DTG to go with new customers coming to us, and Salt Life with an expansion of our channels, creating a perfect point to continue our growth.
Great. Okay. So speaking of those macro perspectives in relation to Delta, consumer demand, certainly what you just mentioned, I love that word stronger. What are you seeing consumer demand for the businesses, and how's it positioning Delta?
So certainly in the start of the year, we have counter-cyclical with respect to activewear, in that our t-shirt demand has continued to hold up. We are seeing orders continuing to be very strong. I think when you look at DTG to go, the opportunities for immediate consumption with an event and a sporting event is really, really exciting, that every time we can get closer to the consumer and continue to prepare is exciting. And I think with respect to Salt Life, with the continued expansion of the stores and the consumer understanding of the brand, as Bob has spoken to, we are seeing both an expansion of the stores and an increase in the shop at home and our e-commerce channel, while at the same time, our wholesale business has continued to deliver strong results for us.
Great. And now let's talk about inflation, and then we'll get to supply chain. What does inflation mean for you? Does it differ in the Salt Life business versus the DTG to go and activewear business?
We're certainly seeing inflationary pressure, as is everyone, across our business, from raw materials to labor costs and freight and moving goods around. And so when you look at those three buckets, we are certainly seeing pressure, as with most other businesses. We have been very conscious, and certainly in activewear, moving through those price changes to keep up with that pressure. And we have seen that there are some slight timing differences you will see across quarters, but certainly we've been able to stay ahead of that with respect to activewear. Salt Life is a business that obviously is seasonal, and we look a long time out in terms of ordering, buying, and then sourcing. And again, with DTG to go, you are closer to the customer, and you can absolutely keep a very close eye on it. Bob, did you want to talk slightly more about those inflationary pressures as a whole?
Yeah, I mean, I think that sums it up well, but obviously our input costs have been going up. It seems like daily sometimes. To date, particularly where we run volume, we've been able to pass those along the supply chain for the most part. And so that's allowed us to maintain our operating margins. But we're certainly continuing to see forward-looking pricing out there for all materials accelerating. So something to keep in mind for sure.
And what type of a price increase have you taken? We've heard mid-single digits, high single digits for some, even double digits. What does it look like for you, and what round of price increases are you in?
It varies a lot by product and type of product, but if you look at basic, undecorated t-shirts, pricing's up, in the mid-teens from a year ago, 12 or 13%. And in addition, we're selling about 8 or 9% more units. So significantly overall volume driven by more units and higher pricing. Cotton prices have accelerated just in the last few days, even more. So that's a big driver of it. But energy prices, labor costs, et cetera, are still all part of it. So, we look at it daily and we make decisions daily. And, on big pieces of our business, we can change pricing daily and do so. And then on some pieces, we have longer term commitments to customers.
And with the recently announced Fanatics agreement, how do their prices differ? And does that give you more scale, or what does it drive?
Yeah, well, it gives us more scale. They've been in this business too, so they understand the cost. But we feel good about the long-term commitment and partnership we have with Fanatics, that it's a fair, sharing of cost and viability of the market share in that channel of distribution.
Got it. And then on the labor side, where are you on labor? Is it distribution and manufacturing pressures where you're taking up the wages? What does that look like?
Yeah, so it's interesting to see this by country. So, we have nearly 9,000 employees now, and about 1,100 of them are in the U.S. So in Honduras, El Salvador, and Mexico, labor's available, and that's where we have most of it. And people are, anxious to work and improve their lives and, forward-looking outlook. In the U.S., we are labor constrained, particularly in our distribution centers, which is where we have the biggest component of that for, whether it's digital printing or packing or some screen printing in the U.S. But really across any type of, worker today, the market is very tight and it's hard to attract and retain, good employees. Luckily, we have a strong long-term base, but as we try to expand and do more, it's difficult to find and onboard new employees.
Got it. And tell us about supply chain, because you don't import from Asia. Do you want to go over, you have competitive advantages there. Can you tell the audience a little bit about it?
Yeah, so again, I think one of the key foundations of our business is we are a vertically integrated supply chain. So we supply ourselves and our customers as their supply chain that we've been honing for decades now. And most of that is made in Central America and Mexico. But we do need shipping, ocean freight. We do need yarn manufacturing where we have a long-term supply agreement there. We do need dyes and chemicals and packing supplies. So all those things are being impacted. Our teams really over the last, almost 2 years now, but certainly 18 months have done a magnificent job of managing through this at every step of the way. And we continue to be able to produce more than we thought we would be able to, which has been driving some of our sales growth that we've enjoyed over the last 5 or 6 quarters. We keep running up against bottlenecks and we keep working around those. Some seemingly get more challenging than others, and we find a way to push through that. So certainly challenging, certainly more expensive, certainly taking a lot more touch points, and people being engaged 7 days a week to see what's happening next and making sure that we're moving forward. But certainly a situation we got to figure out, as a country and industry as we go forward in the coming quarters.
Yeah. And then inventory levels, what does that look like on a macro basis for you, and how you're planning the balance of the year?
Right. Well, we've had generally stronger demand than we've been able to supply. So that, reduces units in inventory. Dollars in inventory are up from all the things we've just been talking about. So I think we're satisfied with our inventory levels. They're flowing quickly, although in process times are up probably at least 50% from where they were pre-pandemic, just, shipping days and times getting in and out of port and that sort of thing. So we certainly have more units in process than we would have had, but they are flowing, regularly now. So, I would say so far so good on our inventory levels. If we had more, we would sell more. We've been in that situation for a number of quarters, but we've also been in a situation where we've been de-bottlenecking in our manufacturing, adding new equipment. We have equipment being installed as we speak in our textile facility in Honduras. And so, we expect to be able to make more product in the ensuing quarters, provided we can get raw materials and labor, to support the production.
Got it. And then do you see promotions coming back into the market? I haven't seen any. And what does it look like in your perspective?
Yeah, so I think the promotional activity is certainly a lot less than it traditionally has been. And I think everybody's working very hard just to have product and service consumers who want product right now. And there's not the need for promotions nor the time to envision them and implement them. So I think right now the whole supply chain to the consumers is very focused on servicing consumers well, having compelling product out there. And if you do that, it's taking care of itself.
Got it. And then lapping stimulus, what does it mean? What are you seeing? What are you seeing there? Doesn't sound like demand has changed from lapping stimulus.
Yeah, we haven't seen it change yet. And of course, we are going into the strong traditional spring shipping for really all of our businesses, are strong in the spring. And so that's starting to happen as we speak. Whether high fuel prices will, slow up vacationing and buying in stores when people travel or not, I think is yet to be seen, but we'll know over the next month or so. But as we've seen, just over the last month or so, demand for product is still very strong.
Got it. Let's talk about the 2022 outlook. I think, Simone, you had mentioned low double-digit sales increases for the year with top line growth and operating profit expansion in each quarter. Any framework to that? And does Fanatics change anything with that or add or investments needed for that?
Sure. So I think that what we've got is our core activewear business continuing to grow as expected. As Bob said, we've been fortunate to be able to expand our capacity by about just under less than 10%. And so that's obviously helping that business to grow. And then we have both DTG to go and Salt Life, both with the sales growth that we had anticipated. And they're faster growth trajectories, and encouragingly, that is what we are seeing come through. I think when you drop that down to the bottom line, it is as expected, encouragingly as well. When we think and talk about the capital required to continue to drive the growth in these businesses, we think about it in three ways. And so when you think about our manufacturing platform, there is the debottlenecking that Bob referred to before. And so we look across the whole supply chain and look to take advantage of opportunities in both timing as equipment becomes available and placing equipment into service to free up a little bit more capacity. And that's what's really driving that expansion in our activewear business. With respect to DTG to go, we have taken delivery of this new Polaris equipment and partnered to put both the Polaris equipment coupled with the R&D technology in terms of the printing and design process that we go through into our facilities. As Bob referenced, they're in 3 and are soon to be in 4. And we will continue to look at DTG to go to make sure they have that right capital infrastructure to continue to be able to produce units as needed. And then when we look at our Salt Life business, the strategy there is both more retail doors. So we've spoken before about our retail doors, and as we continue to open retail doors, that's a really good story in terms of a great use of capital, taking about $500,000 investment. And typically we set and plan for stores to deliver between $800,000 and $900,000 of revenue in that first year of opening. And what we're finding now is we've got several stores that are 1.5 million in turnover. And so that's really, really helpful where you've got that fixed cost base to then be able to have stores committing and delivering revenue in that way. So for Salt Life, we will continue to look at retail door expansion coupled with enhancements to our e-commerce platform and invest there.
Got it. What about on the balance sheet side? How is the balance sheet positioned? What is your plan?
Sure. So as Bob referenced, we've got rising inventory levels, which is both a combination of increased demand and as we came out of fiscal 21, we needed to build inventory. And so you'll see that continue to build. Our accounts receivable days outstanding are solid and consistent. And our debt level also is also consistent. And so we're in a strong position from a balance sheet perspective in terms of being able to make then the capital investments that we want to make and continue to grow the balance sheet.
Got it. And I think last year you were in excess of $435 million, if I believe, in terms of sales. When you look at the long-term opportunity, where are you going forward in terms of sales and EBIT margin? what do you foresee?
So I would say that in terms of the current year, we are seeing activewear grow as expected, with outsized growth in both DTG2Go and Salt Life, delivering that that growth rate that we had anticipated. And I think with respect to our EBIT margin, we've been fortunate to continue to stay apace of price increases, to continue to get ahead of the cost pressures that we are all seeing. And I would expect to see a comparable year this year as well.
Terrific. And Fanatics is super exciting. Do you see other partnerships coming, and does this become your biggest customer in DTG2Go?
So yes, we expect it to be our biggest customer in DTG2Go. It might be our biggest customer in any business, given a few quarters and the power behind the Fanatics brand and what they're doing in the marketplace. So certainly delighted to be teamed up with them and how that will drive that business. So anyway, there'll be a big business. We do see other people that have and coming on board for the quality that we can now produce in our DTG2Go business. So be exciting times to see for sure.
Yep. In the remaining 5 minutes that we have, Bob, it's a year from now. We're sitting here on March 28th of 2023. Simone, same thing. How would each of you frame what we're going to be talking about for Delta in 2023 and beyond as we sit here then, and hopefully in person?
Yeah, would be nice in person for sure. So, we started this fiscal year expecting about 10% top line organic growth at, off of the number you mentioned earlier would get us close to $500 million in revenue. And we're, ahead of that pace, year to date, and hopefully we'll continue, at that rate. So I think we'll be talking about the revenue growth that we've had organically over the last, 24, 30 months on Delta's platform. Looking, from a year from now, I think we'll also be talking about the steps that we're taking to continue that revenue growth. So we're doing a lot of analysis now, with a little bit of a longer term view on where and how we make product, where demands are for where product needs to be made, and we'll be taking steps where we can continue to have a strong organic growth model. It's nothing like good organic growth in the business, and we've enjoyed a lot of that over the years, and I think we're at a point in time we can continue to enjoy that.
Got it. Simone, anything you'd add?
No, I think just building on what Bob said, I think that then what we're going to be also talking about is the DTG2Go partnership and expansion and the new technology and how that's taken in the market. To Bob's earlier point that it's interesting to see where you think trends would come at a certain time to see exactly when that actually takes place. And then from an exciting perspective with Salt Life, talking about this expanded retail footprint and how we've seen that stretch across the country into new markets, and how that's also coming back to, again, talk to our consumer on both the platform as well as in store and see that interaction as well.
Very exciting. I've had this theme of 2022 that businesses have adjusted their processes to include purpose to drive profit. I think about it as you're fitting in that mantra and bucket also. Would you frame it similarly?
Yes, I think as you're going to see more discussion about ESG and purpose, we, for the longest time, have always been very focused on sustainability and a light footprint, both because it's the right thing to do and good business. And I think that as we start to talk more about that footprint, about water usage, about taking electricity out, about our efficient manufacturing processes, equally in DTG2Go, the conservation that Salt Life participates in as well, we'll certainly be drawing more on that. Bob, did you want to expand on that piece of
Yeah, well, I think those are great points. And I would just add in my mind, just a make on demand model in and of itself, really drives good use of our resources and raw materials. Why not just make it when somebody really wants it versus having so much sit on shelf, around the world.
Yeah. Well, I think given that we are right at the top of the hour now at 9 o'clock, that is a good segue to end on. Make it when people need it, drives profit, includes purpose, doesn't have waste, and frankly, keeps you on your path of growth at Delta. So very happy to have you this morning and at the SHARE conference. I want to thank everyone for listening. We look forward to following the journey of Delta moving forward. Thank you, everyone, so much for joining us today. Stay safe and healthy. Thank you, Bob. Thank you, Simone.
Thank you, Dana.
Yeah, thanks for having us.